Traders, Gary Wagner here with the gold forecast here on the 7th day of September. It is Tuesday, one day after Labor Day here in the United States. I trust those in the mainland had a great 3-day vacation, but it is back to business. Business as usual? I don't know. We are reaching historical record highs again in gold. Currently trading 157 to 158 this morning. We are looking to take out and capture these highs that were reached on this last move up on this fifth wave here back in July of this year. This wave is unrelentless, and as we see it move up, we see this market continuously strive for the gold ring. And the gold ring, as far as I'm concerned, is to take out this one particular area. And as I've talked about over and over again, I personally believe that this market is headed to $1,300. If we take a look at the COMEX, that is currently trading, this is basis December, 1259.60. So as you can see, 1258.15, so the low teens, 1258, 1259. The difference between the spot and our outer December month are really diverging. They're by all means coming closer and closer at this point. Also, as we talked about on Friday, when we take a look at our weekly chart, and this of course is our weekly Forex gold chart, we talked about a continuation pattern, and that continuation pattern is called three white soldiers. The three white soldiers indicate typically a continuation in the trend, and as you can see, this right now is only for the beginning of our trading week. And now that we had a very quiet activity. Of course, it was trading basically unchanged throughout Sunday and Monday during the Labor Day holiday here in the mainland. But once New York opened, we took off like a wildfire, and in fact the market moved, as I said, roughly $10 higher. And the easiest way to take a look at it, of course, is to take a look at our intraday chart so we can really take a solid look at this activity. So traders, what we're looking at here is a 10-minute chart. So you can see during our Labor Day weekend, as the market itself was trading, it was trading in a really very narrow range. As you can see right in here, came down, made a low right around 1245, and then in a period of time of 10, 20, 30 minutes, and you can see this, that market shot up and moved higher, and now we're back trading in this tight little channel here as it goes and builds a new base at these higher highs. So traders, where do I think this market is heading, and what did we see with that hangman when we looked at it on Friday? Well, I do have an interesting theory on that right now, and let me blow this up so I can show you what I'm talking about. First of all, in terms of where I think the market is going, I think that after we take out our highs based on our 1265 area in the Forex, we will be having a race. As I said, for the last couple of months, I've been talking about that my timetable then was 4 to 6 months. That was a couple of months ago. So now we're looking over the next 4 months. I personally think that we'll see $1,300 gold. Now, in terms of what we saw with this hangman, as I said, without confirmation, it doesn't really mean anything. And what it is showing me is that in typical markets that are not as bullish, you will get these hangmen, and they can be significant of a market that's consolidating and about to shift power. However, in an extremely bullish market, what these candlesticks are these are our single rounds of profit taking. In other words, typically where the market would come, it would form a base, it would trade lower and then move back up. What you're seeing is profit taking coming into the market, and then you get buying the dip mentality. You get traders who believe that these are good prices in here, and any kind of a dip causes them to rush into the market. So that where in a typical market, something like these dojis here, this hangman, this inverted hammer, which is a shooting star at the top of the market. These small bodied candles that you'll see throughout that would typically show you consolidation in the market are not. What they are showing you is that this market is so bullish that when this activity happens, it is a point in which the market is breathing, taking a break, consolidating before having another major spurt to the upside. So traders, what I am looking at is this. What I've done is I've put up a horizontal line to show you where I see what our next market move must be. It needs to be able to take out this one area. Effectively, I talked about a resistance area that was based upon this third wave right in here. And we have effectively blown over that market and well above that. My expectation at this point is that what we will see is that slowly this market is going to form a base in this area, and then I would look for it to go and take out these highs and move to some new contract highs. Once we do that, my personal sentiment is that, of course, there will be peaks and dips and valleys, but I think that we are on a slow, methodical march to $1,300 in gold. This has been Gary Wagner with WFGForex.com. As always, wishing you good trading, and we'll talk to you tomorrow. Bye-bye.